A warm welcome to this Inderes TV event. My name is Petri Gostowski and I'm co-head of research at Inderes. Tonight I'm going to give you a short introduction to the Helsinki Stock Exchange, and our main presenters today are Relays Group and Solvers, from which representatives will give an introduction to their company. Let's kick off regarding Helsinki. We'll walk through the market through Inderes coverage. We at Inderes cover some 160 companies, which equals to around 85% of the whole Helsinki stock market. So that would be the main list and the First North growth list. Here I have the top 10 companies in terms of market cap, and we can see that Nordea Bank, Kone, the escalator company, and Nokia are among the top 3 companies based on market cap. The whole Helsinki stock exchanges account for some 250 billion in terms of market cap, of which the top 10 companies amounts to some 70%. If we look at the earnings, around three quarters of the Helsinki stock market companies' combined earnings come out of these top 10 companies. So we can say that the Helsinki markets are kind of centralized. We have a heavy industrial and financial companies weight. If we look at the top 10 companies, Nordea Bank being the biggest one, and Sampo, the insurance company, they bring a heavy financial weight to the stock market. And among the top 10 companies, we actually have 5 industrial companies. So the industrial economic industrial outlook and the financial markets are really a driver for the Helsinki Stock Exchange. Then, if we extend our view to the top 25 companies, these amount for some 90% of the total market cap of the Helsinki Stock Exchanges, and they actually bring 95% out of the net earnings. So their weight is very high, and that also means that we have a big chunk of rather small companies in Helsinki. Looking at the market performance of the past few years, we can from here see that during, especially during 2021, small cap companies were performing very well. Benchmark index of Helsinki, not so much, but in line with the MSCI World Index. But then on the other hand, we can see that lately we've fallen behind from the development of the World Index, and there are probably a couple of reasons behind this development, of which I'd say the biggest one is here. So here we have the key metrics for Inderes total coverage. So this gives a good picture of the whole market, as stated, that our coverage accounts for 85% of the Helsinki Stock Exchange. And we can see that in the past few years we had a rather good earnings growth here, but then in 2023 the direction changed, and we clearly saw a decrease in earnings that was mainly driven by weak growth, but then on the other hand, inflation brought cost growth, and also the higher interest rates, or due to the higher interest rates, we saw an increase in financial costs, and we can see that clearly in the 7% median EPS decline in 2023. Based on current year's estimates, we should see a shift in earnings, so we're expecting a slight earnings growth. We actually got some already on Q3, but as you can see from the figures, revenue growth is at some 1%, and operating profit and EPS growth is around 6 to 4%. So that basically means that companies been growing their earnings through savings, which should not be something that happens in the long term. Obviously, we need growth in order to have profit growth, and therefore we're really looking forward to see the economic growth start, hopefully next year. Given the market development and the earnings development, if we look at the current next 12 months earnings multiple, so this would be the PE multiple, we're currently at around some 13, whereas the long-term median is around 14. So based on earnings, you could say the valuation is rather modest here in Helsinki, and just want to point out that this is the definitive consensus for the 12 months. So it obviously has Inderes coverage, but it also has other analyst coverage for the whole Helsinki stock market. But nevertheless, on an earnings-based, Helsinki is not expensive, quite the contrary. And remembering the last slide, earnings are coming from a rather low point. So overall, the earnings performances are not on the very high side currently. Then another metric to give you a picture on the valuation in Helsinki, this is the price to book ratio, which is currently at around 1.3. And again, the long-term median is at around 1.7 to 1.8. So there, the discount actually to the longer-term average is much wider, and can't really think of any reasons why we would be valued on a price-to-book based multiple clearly lower than what we've been to. I mean, we can talk about interest rates and the macro environment, but given the current outlook, interest rates are not expected to stay too much higher than what we've witnessed in the longer term, and nothing really has shifted in the Finnish company's outlook. So I wouldn't expect this clear discount to history to be something that would prevail, but we'll see what happens in the future in terms of valuation. If you're new to Inderes, I warmly welcome you to our community. You can explore our research at inderes.fi, SE or DK. There's, like I said, around 160 Finnish companies that we cover. There's a few from Sweden and one from Denmark currently, and hopefully a lot more in the future. I'd like to point out that just recently we initiated coverage on Spotify. I think that's a very familiar company to everyone. Hope you find the research useful. And just to give you an overall picture on our current research stance, we have some 60% positive recommendations on our platform, and on the contrary, 40% negative. So this kind of 60-40 split is something that is in line with the longer-term average, but kind of pictures the low valuation and interesting earnings outlook that we're looking forward to next year. But with that, and any further delay, I'll welcome Relays on the stage.